Bank after bank, March 10th, March 12th, and May 1st. Failure after failure. What happened? Why did 3 banks fail in 1 year? Almost in succession. In summary, these banks didn't have enough money. The financial term for this? Insolvency. The 3 banks which failed in 2023 were Silicon Valley, Signature Bank, and First Republic Bank, in that order. While all banks failed due to insolvency, each bank's route to that condition was a little different. Silicon Valley Bank's poor investing strategies led to its demise. It invested a majority of its funds towards treasury and mortgage bonds, and when the Fed decided to increase interest rates, it obliterated the value of the bank's investments in bonds. The Fed uses interest rate hikes on short-term federal funds rates, or in layman terms, the interest rate that the Federal Reserve gives to commercial banks to raise borrowing costs to slow down economic activity and dampen inflation. Prior to this, the Fed maintained a near 0% federal funds target rate during the pandemic to make it easier for banks to borrow money. But following rampant inflation post-pandemic, the Fed has hiked the interest rates to combat the rising inflation. Earlier this year, deposits started leaving quickly from the bank, and it got to the point where banks weren't able to pay the money that they had on hand, so they had to go sell the bonds. But the problem with that is that they hadn't reached full maturity, and in essence, the banks took a big loss on the bonds. Following that, the bank made an announcement saying that it needed to raise capital. It knew it was in trouble. Consequently, this led to investors worrying about the future of the company and bank, and the stock quickly fell. Everyone was advised to take their money out of SVB, and eventually, the bank had to shut down. This is a very similar story to what happened to Signature Bank, shutting down only days after SVB. And finally is First Republic Bank, the bank which reinvigorated this topic of bank failure. On May 1st, a few months after the other 2 banks had shut down, the US government seized First Republic Bank in order to transfer the assets to the biggest bank in America, JP Morgan. First Republic Bank was no different than the previous 2 collapses. The bank bought a boatload of bonds hoping to grow their wealth and got screwed over from the heightened interest rates. So what does this mean for the future? Well, for now, banks which have a lot of wealth and bonds are taking careful steps not to end up like these 3 banks. And as always, the lesson of this often told story is simple. Don't keep all your eggs in one basket.